Hi guys, this is Nikki, also known as Faces Trader, and you're watching the Awesome 10X Global Market Update. It is on October 30, 2020, and it's a Friday. It's already end of the month. I'm going to share to you the things that I've been sharing inside the Awesome 10X Inner Circle. I'll give you a preview of what's happening inside our Viber group. Of course, we have Viber. We've got also an Awesome 10X Slack group. So we kind of give people really guidance for their 10X investments. Now, for the day, these are the top news that you have to be aware of. Okay, let me just find in the articles. Okay, so this is something that I shared last 7 a.m. Shares of Alphabet soared 10% in extended trading after the Google parent company posted quarterly results that topped Wall Street expectations. So shares of Facebook gained more than 1% after social media giant. So I'm going to discuss Alphabet, Facebook, Starbucks, and also Netflix raising prices on standard and premium plans. So let me just begin with those things first. Let me go to those charts, Finviz. So here's what you do. Go to finviz.com or tradingview.com. Same lang. It's fine. So we've already got a 10%, sorry, not 10. For Facebook, I think it's just up 1% later after hours. So, but very good numbers for Facebook. So why don't we read something about the numbers? Mega cap tech disappoints where nothing's good enough. Actually, that's not true. Facebook and Google was up after hours, so Bloomberg is wrong. Apple and Amazon didn't do well. But anyway, let's read this. Let's read what Bloomberg is saying. Earnings angst. ETF tracking NASDAQ falls after results from tech mega caps. Solid quarterly earnings from America's biggest firms, the Fantasium, failed to keep investors from selling late Thursday. The sentiment is against the ultra-expensive digital mega caps. Slide follows a hot run, how fully valued all of these stocks are. While the companies continue to deliver strong earnings, investors have turned their focus to whether a slowing economy will still enable a profit growth that justifies the sky-high valuation. Apple lost 1%. Apple lost 1%. Shares almost dropped 5% after the firm revealed that iPhone revenue missed analyst estimates and a delayed iPhone 12 launch. Twitter fell a lot. I agree with this. Twitter fell like 15% after hours. Stock got hammered as a very small user growth. Alphabet, however, was a bright spot. Google actually returned to growth from a third quarter after decline in the previous period, fueled by digital advertising. Google's opening $1660 later on. We have Google and we'll just keep it. So I think that winners win. So yeah, we just keep it. However, tells us though that the mood in the market is that it's not broadly great. Some people would sell. I know what people are doing. People are choppy. They would sell even a great number. So I'm gonna share to you a few things on the earnings. Take the earnings first. Read first the earnings. Let's read the transcripts from Facebook. Okay. Facebook actually beat earnings yet again, as usual. And Facebook is something that we also own, core portfolio. Let's read. Mark Zuckerberg says that WhatsApp is now seeing 100 billion messages exchanged a day. For those who aren't aware, there's about 3 billion users of Facebook Messenger and WhatsApp. And you've got half of the world basically using Facebook. So let's see. Facebook is already seeing 100 billion text message, not text messages, but WhatsApp messages every single day. The CEO didn't share figures on their Facebook Messenger and Instagram. However, Sheryl Sandberg said that more than 40 million people are viewing a business catalog each month on WhatsApp. Company will soon enable an option to click a WhatsApp icon on a Facebook shop to chat directly with the business. Both Zuckerberg and Sandberg highlighted that the company's efforts in enabling cross-platform communication across Facebook, Instagram, and WhatsApp. People tell us they want to use the app to reach everyone they want to message. The company is rolling out an update to Instagram that adds best features from Messenger, creating a better messaging experience across both apps. We've got early feedback and it's been positive. Social media giant should be enabled to also buy products within the chat in WhatsApp, integrating business features, e-commerce within Facebook shops with the Facebook Messenger. When a small business sets up a shop, they can now establish a commercial presence across Facebook, Instagram, and WhatsApp all at the same time. Why does this matter? Because WhatsApp has 2 billion active users on a monthly basis. Facebook has 1.3 billion. Tencent, which is the WeChat, has 1.2 billion. So actually, Facebook is more powerful than Tencent. In August, Facebook formed a new group led by David Marcus, the co-creator of social giant's Libra currency, which is to integrate that into WhatsApp in Brazil and India. Social media giant reported great numbers, revenue of about $21.47 billion versus the expectation of $20 billion on Thursday. Facebook closed 5% higher to close at $280 and fell 2.65% in the after-hour session to $275. The verdict of Awesome 10X, keep Facebook. Keep Facebook. You've got so many reasons to buy it and no reason to sell it. Okay. You can read more of the transcript if you wanted to. You've got this is the entire earnings call transcript. You can read more, do your own due diligence. We like Facebook on the AR/VR platform, the Oculus Quest, the e-commerce foray with the Instagram and WhatsApp, all across the board. Of course, digital advertising is also great. There's a lot to uncover in just reading the earnings transcripts, and Awesome 10X wants you to read that yourself. We have to also discuss Alphabet, so let's read Google. Kadoom, kaboom. Google is a part of our core portfolio, and Google is there, Alphabet, for us, 10%. It never disappointed. That was not that highlight of Alphabet. The highlight on Alphabet's earnings was really the digital advertising growth. So it's a reopening play. We said to you that as the pandemic ends, all the travel, all of them will go back, and Google actually will benefit from all of that. So let's read the numbers for you. With the world accelerating the transition, we saw strength in Google Cloud, Google Play, and YouTube subscriptions. This is the third quarter that we are reporting our earnings during a COVID-19 pandemic. This year, we showed you how Google's founding products, which is search, has been to people. More importantly, our products and investments are making a real difference as businesses work together to get back on their feet. Whether it is just looking for a COVID-19 case, the latest information in their area, which local businesses are open, what online courses will help them to prepare for new jobs, people have always turned to Google for that. Guys, Google has their own $400 or $500 Google University certificate. And in my view, that is quite a game changer for those who cannot pay for college tuition, which is probably $30,000, $40,000 a year or even more. You can actually get a good job in IT. You can study through Google's courses. Of course, YouTube University is always there for free for you as well. And we have used Google's duplex AI technology to make calls to businesses and confirm things like temporary closures. This has enabled us to make 3 million updates to business information globally. We know that people's expectations for instant perfect searches are high. That is why we continue to invest deeply to AI and other technology, ensuring the most helpful search experience possible. So they've got more advancements in their search. Also, they're able to help you approach videos. And one of the most favorites is to actually identify a song in orders based only on humming. For all those aware, Google, of course, has invested very well as well in artificial intelligence just to make it better. And actually, Google is such a value play, in my view. It's not really a growth play. It's just too valuable, Google and Facebook. So for anyone who talks about sky-high valuations, the answer by Awesome 10X is they know nothing. As of today, merchants can list products for free on our shopping tab in 48 countries around the world. For advertisers, we recently announced a new insights page in Google Ads to help businesses better understand consumer trends and track current search demand for products and services. We are also investing to create improved search experiences, additional value to news publishers. We recently committed $1 billion for just enabling Google News, showcasing local news publishers, national, regional, or local, and editorial curation for award-winning newsrooms. So that's great for Google. We have signed partnerships, nearly 200 publications around the world, and more to come. We know that our success in search isn't guaranteed. Me, per se, guys, I'll pay Google to give me the best news available and curate it for me rather than paying for Wall Street Journal or so forth and so forth. So kudos to Google for that. On that note, regarding the DOJ Lowe's lawsuit, we believe that our products create significant consumer benefits and we confidently make our case. Our company remains focused to build a search product that people love and value. I agree, I love Google. Moving on to other parts of this business in the quarter, the very best of Google's hardware, software, and the latest AI at an affordable price with new cameras and assistant features. That's their Pixel phone. I don't use a Google Pixel. Nonetheless, I will purchase a Google-related wearable or Google glasses someday in the future. I won't be wearing Apple glasses. I think I'll use Google glasses. I'll support Copin. I'll support Google and Copin. Our latest Chromecast now comes with Google TV, brings together movie shows, live TV from across apps, organized for you. YouTube Premium does well. Of course, people come to YouTube for entertainment, information, opportunities to learn something new. You wouldn't be hearing from me without YouTube, so kudos to YouTube. Just a trivia, 2005, Eric Schmidt tried to buy Google. Google wanted to buy YouTube for $50 million. In the end, they had to pay $1.65 billion. It still is one of the best acquisitions of Google. In year 2005, people thought that Larry and Sergey Brin and Eric Schmidt was crazy for buying Google, for buying YouTube at $1.65 billion. That was year 2005, 15 years ago. However, as you well know, it is one of the best investments, 100x, 200x investment for Google. YouTube today is already the videos for meditation as a sign of the times. People need calming music, relaxation music. That's up 40% since mid-March. Do-it-yourself face mask tutorials have been viewed over 1 billion times. YouTube subscriptions continue to grow. YouTube now has over 30 million music and premium paid subscribers and over 35 million, including those on free trials. YouTube TV has more than 3 million paid subscribers. So that is a nod that more and more people are watching videos. And I've seen an AI compression done by NVIDIA, a very great company as well. They could, with AI right now, they could compress your face, etc., 10 times lower bandwidth because the AI can study your face and they can remember that. So they don't have to stream everything. So basically, my face is really just like the AI remembering my face. So, and so forth. Pretty cool, actually. You can learn more. I shared that fireside chat of NVIDIA and SoftBank, Masayoshi Son. It was one of the best 2-hour interviews, 2-hour presentation of SoftBank and NVIDIA. I want you to actually put a watch on that. If you don't have it, I think you're missing out. I have NVIDIA, I have SoftBank in my long-term portfolios as well. In my Twitter account, which is @FacelessTrader, you could see that I shared that fireside chat last night. I'll share to you that here in my profile Twitter. This is that one. This one. I watched it today. That means I watched it last night. SoftBank webcast, one of the most enjoyable videos I've watched today. Absolutely happy with NVIDIA and SoftBank. Learn from the best. Actually, I added more NVIDIA last night at 510, 512. Yep, I don't mind. Even if it goes for 490 tonight, I don't care. I'm digressing. Sorry. Let's go to Alphabet again. So for all those who aren't aware, YouTube makes about 50% cut on every content subscription. Live streams, something like this. It can be 70-30, 70% for the content streamer if I'm a huge gaming streamer with like hundreds of millions of subscribers, which I don't have. Nonetheless, it just tells you that YouTube makes so much money and also makes a lot of money for other YouTube streamers as well. So it's a platform that, in my view, is quite an undervalued gem inside Google. Next, we discuss Google Cloud. It's number 3. Number 1, of course, is Amazon. Number 2 is Microsoft. Number 3 is Google. Google three trends driving the shift of all the enterprises. The continued momentum of cloud is, of course, the digital acceleration. They still have data processing, Google Analytics. This is their fastest growing segment of the market. BigQuery provides real-time predictive analytics for winning retailers like Best Buy, helping them create better experiences for their shoppers. Customers are also valuing the differentiated artificial intelligence, machine learning-based industry-specific solution. This is a leading significant win for brands like Unilever, Amwell, American Well, which is the competition of Teladoc. I covered Amwell in my inner circle. It's a good company, guys. Reckitt Benckiser, I didn't study that. While working with government agencies like US Navy, modernizing maintenance operations for vessel and facilities. We're also partnering with Defense Innovation Unit, part of the US Department of Defense, to help military doctors with cancer detection research. You know, I really find artificial intelligence such an awesome trend, such an awesome 10x secular trend. I've invested in NVIDIA, I've invested in SoftBank, who has a huge artificial intelligence core holding. I've also invested in Palantir. I also invested in CrowdStrike. So yeah, I love this sector. I love the AI sector. Baidu is very strong in AI. I used to invest in it, then I traded it because Baidu was a little bit slow for me. But I think like there's really a huge trend, AI, automation, and all of that. Google, albeit not the strongest in AI, still very strong moves, right? I like Google for many reasons. I don't have a reason not to like it. I don't think you have any reason not to like it either. Customers are increasingly moving to the cloud, lowering IT costs. The future of work is a more collaborative world. Google are customers looking to support hybrid work environments, Google Meet, Google Workspace. Well, it's not like a Microsoft Teams, right? But at the very least, at least they have that. Finally, in our other bets, these are their moonshot bets. Waymo. Waymo is the fully autonomous ride-hailing service in suburban Phoenix. It's open to the public, making it the only company to offer a fully autonomous service for riders. Waymo has already strategically partnered with Daimler Trucks, enabling fully autonomous trucking. So before I close, I want to end with this. We like to create the most helpful products for people. Search, maps, shopping, YouTube are prime examples. We make Gmail handles and blocks 100 million phishing attempts every single day, 100 billion scams, apps for malwares and other issues. Google Play protects you from them. We also execute in scaling productivity, collaboration, financially viable and self-sustaining products. Look, Google YouTube TV is 2 million. Maybe it can be, become 10 million. That's never gonna be big, unlike, of course, Netflix with 200 million. We're gonna discuss as well Netflix increasing the pricing from about $12 to as much as $17. I'm gonna discuss that as well. Today is a huge day. You've got a lot of great earnings, a lot of discussion. Even if we just discuss Facebook and Google, I could already speak an hour. There's too much to discuss. Nonetheless, alangan naman sabihin ko sa inyo, I'm just happy. Of course, there's a lot of more reasons why to be happy, right? But you can read all of it. I would suggest that you go to the transcripts yourself, read up on it. So next topic, let's try to discuss Netflix. Netflix did a great increase of their premium subscriptions. Remember that Netflix fell down from 550 to 500 because for 88 because Netflix had only 6 million subscribers. Net addition. Now, you know, the US, sometimes these analysts, they have too much expectations. I don't know what they're talking about. It's such a great company. They can talk a lot, but in our view, we know that 550 is expensive. Nonetheless, you know, I'd love to get Netflix at 450. It never fell down there. Now it's at about $500 because of this great news that Netflix is increasing their prices. Netflix raised prices for the standard and premium tiers of its subscription video on demand service, sending Netflix stock surging. Netflix is raising the standard price in US by $1 to $14 a month. Guys, if you're not aware that $1 a month is $12 a year, Multiply that for 200 million, that's $2.4 billion kashing for just $1 increase. So that's like inflation, but that's Netflix kaboom income. That's how much Netflix has pricing. You talk about moat, you're talking about pricing elasticity. Netflix has that. It means that it can just earn $4 billion and $5 billion easily for just $1 price increase. And that is actually magic cash flows for Netflix. So that's just how great this business is. Netflix is keeping the basic plan at $9 a month. The premium tier will increase $2 to $18 a month. If you are used to inflation, guys, when I asked you to pay 5% higher or 10% higher, it's just what people would argue. Well, you know, Coca-Cola, they charge 5% higher, 10% higher. That's just like what inflation, right? So Netflix deserves that inflation price. I agree. So I don't think that the subscribers will cancel their subscription with this $1 increase in price. So it is it's a small thing for that $1 increase, but in an entire magnitude of 200 million subscribers and 12 months, that's like $2.3 billion increase in revenue, and therefore, of course, the market is joyous. Netflix stock went up $500. That went to $500 after hours of that news. In my view, because of that news, chances are this $550 will easily be attempted again. Nevertheless, you could see that there's been double, triple tops. 1, 2, 3, you've got this very strong support at about 460, 470, 480. So I would assume that Netflix will just consolidate in the next 5, 6 months. Any drops near 450, this is a very strong support. And yeah, so if you don't have Netflix, if you want to consider Netflix in one of your buy areas, then that's something that you have to consider. Fastly reported earnings. I didn't find anything wrong with Fastly's earnings. Actually, I think that this number at about 68 to 60 is a buy. Would you believe me, or would you just read on your Facebook? Or would you just read on your Twitter handles? If you're not following Beth Kindig, I think that you should. Beth Kindig had a good tweet on Fastly, and I'll read it to you. You know, I don't really need to evaluate Fastly for you. The entire Twitter universe, FinTwit, is already doing it for free for me. Beth Kindig, okay. Asset utilization ratio calculates the total revenue earned for every dollar of assets a company owns. Ratio is commonly used to compare efficiency over time. These 10 lead the pack in the high-growth tech space: Square, Roku, Zoom, Etsy, Nvidia, Fastly, DocuSign, C Limited, Mercado Libre, and Shopify. By the way, guys, Shopify made an outstanding earnings report last night. People sold it down. Probably people selling it down due to valuation. What does Awesome 10X think? I don't care. We want to buy it at 990. We want to buy it at 900. If it goes down 850, we think that, thank you, Lord, that we got it cheap. We like great businesses. We like great boats. Fastly, I think the good one here for you to understand is actually there's this guy who made a good report. I'm gonna read the nice Fastly understanding that I've read today. I've already read the earnings report, guys, so I'm just gonna give you a summary. And sometimes I don't really need to do it because everyone else has already done it for me. Howard Chen, yeah. Howard Chen, I follow him also on Twitter. This is a good, so he actually said that, you know, Fastly dropped their new earnings last night. How does it compare to other CDNs, content delivery networks such as Cloudflare, or Akamai? So when it comes to growth, you could see that Netflare has 48%, Fastly had 42%, not so shabby. Akamai was just doing about 12%. So revenue growth-wise, Fastly deserves that premium. Fastly has a net retention rate of 137% versus Cloudflare's 118%. In terms of EV versus net trailing monthly revenue, Fastly is 20%, 20 times versus Netflare's 88 times, meaning it's not as expensive as you think. Current free cash flows, he changed this. I'm gonna share to you. And the gross margin is 58%, 59%. Akamai is 64%, Netflare is 76%. So the gross margin of 60% is not to be poo-pooed on. Citigroup actually lowered the target price from about $58 to $47. They gave a sell rating on Fastly. They noted that the largest customer, TikTok, withdrew its traffic across the board. 10% of the revenues of Fastly came from TikTok. Guys, in my view, Citigroup is wrong. Follow the FinTwit analysts. FinTwitter is correct in my view. We buy Fastly, 68 to 62. Just keep accumulating Fastly. You can do your own analysis, but I think that 68 all the way to $60 is a buy. Let's take a look at some more reports. HEXO. This is a this is a cannabis company in Canada. Let's take a look. They have been expanding in Israel. Should we buy HEXO Corp at 70 cents? So let's read this. HEXO's top-line growth this quarter reflects the ongoing success of our products and high quality of our offering. We are commanding significant market share in Quebec this year. We made major strides launching Trust Cannabis-Infused Beverages in Canada, in addition to our initial foray in the US with Molson Coors, a world-class partner. Guys, do you not know who Molson Coors is? Molson Coors is a beer company. So they have cannabis-infused beverages. I wanted you to know that Gwyneth Paltrow also just recently had her own cannabis-infused drink. So let's read that. 14 hours ago, Gwyneth Paltrow, Ruby Rose, other celebrities are backing cannabis-infused beverage brands. Let's read this. Now, if you're asking me why do I know a lot of things, I read a lot. I watch a lot, I listen a lot, pretty much 24 hours a day, unless I'm sleeping. Gwyneth Paltrow says cannabis is the hero ingredient of the future as she invests in cannabis-infused beverage maker. GOOG CEO, which is Gwyneth Paltrow, shed light that she is investing an undisclosed investment in Cann, a cannabis-infused beverage maker. She believes that cannabis is wellness and the drinks are an appealing alternative to alcohol. We believe in the same thing, so we agree with you, Gwyneth Paltrow. You can actually read that for yourself if you wanted to. We agree with Jay-Z. We agree with Gwyneth Paltrow. We agree with all the cannabis celebrities, whether it be Magic Johnson with Uncle Buds and Jane Fonda and so forth. Kristen Bell, Happy Dance. So much news to discuss. So the key operating results. Okay, revenue for each gram of HEXO. It's about $4 or 29%. And then continued market expansion powered by HEXO, contributing to $2 million of net revenues. Revenues grew 76% from the same quarter in the prior year. Gross revenue of $36 million, highest in the company history. Adjusted EBITDA, gross margin is 42%. Operational cash is $3.8 million. Okay, you can see it to the $20 million to $36 million of sales. 12 months ended, $59 to $100 million. And yet, the price is at a cheap price of 70 cents. So Awesome 10X believes in HEXO Corp. This is one of the companies that we would have and hold while it's 72 cents. We buy it, we keep it. We don't really care if it goes 60 cents. Okay, now I'm going to answer your questions and commentary. OFW Philip Blythe said hi, and I say hi to you as well. Then she said, hi, Nikki, can you review NEO as well? So NEO had captured from about $2 to $30. I was saying actually inside our inner circle that it was my negative bias on NEO because it was a bankruptcy company that was supposed to default already on all their obligations. They got a bailout twice. I actually shared that NEO here in the Faces Trader. Okay, so I shared a little bit. I said that, I don't have this, but a huge congrats to everyone who owns NEO, especially since the $2 levels. NEO went from $2 to $30, and because I know so much about NEO, it prevented me to buy this scandalous company even if Tencent already bought at $2. NEO actually went from $1 to $30 or a 30x move in 7 freaking months. NIO is a darling of China's electric vehicle industry. It appeared to teeter on the edge of bankruptcy for months. No major investments, no revenues, no nada. It even got melting down because of COVID-19, but NIO turned out to have an ace in its pocket, which was the government. If the government didn't step in, NIO would have been zero. So there was a lot of scandal on NIO, to be honest. NIO went up last night because of so here you could see that NIO went from something like $1. Take a look at the 52-week low. 52-week low was $1.36. It's now doing $29. It's actually trading at $30 or something like 30x in about 7 months. So NIO hits a big milestone. Wall Street sees strong EV leader in the making. Strong stock source amid broad gains among EV makers. Awesome 10X believes that while NIO can keep climbing, we don't want to buy it at $40 billion. We don't see that NIO is the strong leader like Wall Street is saying. In my view, there's so many companies in the EV space. And if I'm going to pay $40 billion for NIO, I might as well own XPEV, which is at $20 below. And some of us got in at XPEV, $20, $21, even at $18, $19. This company is at $15 billion. If it's going to go $40 billion and $100 billion someday, I think that XPEV, I'll make $100 here. So, call me a skeptic. I just believe more in XPeng rather than other electric vehicles in China. Do you like any healthcare or vaccine stock? Yeah, I have some cancer therapy picks, but I'm not here to share that to you. Thank you very much. All right, looks like 30 minutes is up. I want to explain to you guys that we have a free Friday class pick later on. Trade Like a Champ is asking, what can you say about MPWR and Qualcomm? I don't know who MPWR is. I do know Qualcomm. Qualcomm, I have it in my portfolio. It's a 5G name that I like. Qualcomm, we keep it. Some of us sold some at $130. Monolithic power system, semiconductor. I haven't studied this one. I don't know what it does. What does it do? Monolithic power is a integrated power semiconductor, power delivery, architecture, consumer, computing, storage, automotive, industrial, communication. I haven't studied it. I think that you're doing well. So 140 to 300. So you're up like 100% and more. If you invest in the last 7 years, you'd have seen your money $30 to $300. 10x move. Congrats, but I don't know. I don't know anything about MPWR. With Qualcomm, though, if you've invested in Qualcomm, I just think hold on to it. What is your stand on Slack? I used to like Slack, but I think no. There's not a competitive moat on Slack. I could be wrong, but I think that there's so many easier bets rather than Work. Work, aka Slack, I think has a fundamental problem in that they're trying to compete in a space where there's so many people, so many players. Of course, you're aware that Work is a collaboration platform. I use Slack. I'm a consumer, but I'm not paying for anything on Slack. I'm just a free user of Slack. I'm not sure if Slack can really beat Microsoft. So in my view, I'd stay away from Work. I won't buy it. It's not where I'll put my money in. I used to have Work, but I sold it. Took profit. I also took a loss. I had a profit then because I bought Work early before, like $20. Then I also bought at 30. My $30 was wrong. So yeah, right now it's 25, 26, right? I think it's doing nowhere. So like I could be wrong, but there's just too many easy bets rather than Slack. DBX, what's that? Is that a commodity ETF? I don't really invest in commodity ETFs. Dropbox, sorry. Nope. I haven't studied Dropbox, and I think like data storage isn't something that I'm not interested. The answer is that I'm not interested. Okay. Yeah, so there's a lot of companies that are great earnings, and I hope that you learned something. Wanted to invite you later, 5:30 p.m. Every Friday we do free deep dive. So see you then, and bye-bye. Please smash the like button and subscribe. Free for Awesome 10X. Bye-bye.